Richard or Nick? There we are.
Perfect. Great.
We're recording. Okay. Welcome everybody. Thanks for attending our session today. A little bit of a dreary day, much nicer day yesterday and stuff. So this is a great time to do stay inside and listen over your lunch hour here. So we have today presenting Christy Wall, who's the Business Development Manager for Manulife Bank. And she's going to walk us through sort of the ins and outs of this program called Manulife One. And I got introduced to Manulife One a number of years ago and found it to be a very, very powerful tool in the whole financial planning for my clients. It works along with everything else that you've got working, and it uses sort of uh, just the regular cash flows that you guys are producing, yeah, which is really interesting. So without giving away too much of the secret recipe here, I'll let Christy kind of take it from here. And welcome, Christy, to the Jocelyn group. And yeah, I'll let you run with it.
Thanks, Joe. Thanks. So as Joe mentioned, I'm going to show you how we can make every dollar that you're earning work across your entire picture. So we're talking about income, we're talking about savings and debt. Now all in one simple account with Manulife One. So you're going to see how this is going to simplify day-to-day banking and help you and or your clients become debt-free sooner. I will leave some time at the end for a Q&A because there are generally are questions that pop up. So I should be done in plenty of time for lots of questions. So now most people know Manulife for insurance, investments. We have our group benefits division. But few people realize that Manulife Bank has actually been serving Canadians since 1993 as a fully licensed bank. But what is Manulife Bank best known for? Well, Joe alluded to it. It's Manulife One. Now, this is a flexible home equity secured account that it goes well beyond a standard home equity line of credit, HELOC. In plain language, it's smart and a simple way to access the home equity that really helps your money work harder every day. Now, I want you to think of Manulife One as a cash flow system. It's not just a mortgage product. Now, your paycheck should not sit idle in a checking account while you're paying interest on debt that you owe. With Manulife One, your income, it's going to land against your debt, that balance owing, the day it arrives. Okay. And then it's reducing the interest immediately, keeping your cash flow simple. And if I lost you there, no worries. This next slide is very helpful for a lot of people. Let's just take a moment to think about how most of us manage our money today. If you're like most Canadians out there, your finances probably look something like this. You have multiple accounts, maybe a few credit cards. It's probably spread across more than one institution. I know I certainly was in that boat prior to moving to Manulife One. This is, the traditional approach to money management. It's what we were all grown up with, it's what we were taught. It feels very familiar. But when you actually sit and think about it, it's more expensive than you may realize. Our goal is a cleaner, cheaper path where your dollars pull in the same direction instead of working at cross purposes. So Manulife One is really about helping you get your own money working for you, the client, and not just for the banks. So here's how it works. We start by setting up a line of credit secured against your home. That's honestly something that any bank can do. That doesn't make us special. But we consolidate your savings, your mortgage, maybe your credit card debt, and any other loans into this one account. So now your savings aren't just sitting there in a checking or a savings account earning you probably next to nothing. Now that that money is actually actively working to reduce your debt, and then it saves you interest. So here's the game changer though. We turn that line of credit, the Manulife one, into a fully functioning checking account. So that means every time you get paid, that money goes straight into your Manulife One account. It immediately reduces your debt. And since interest is calculated daily on a line of credit, the less you owe that day, the less interest you're going to pay that day. And it's actually that simple. But if you're like many Canadians, you prefer the structure of a traditional mortgage and maybe that little bit of certainty, you can still lock in a portion of your debt at a fixed rate. So you get the best of both worlds with Manulife One. You get flexibility and stability. So as the slide shows here, your income, it flows into the Manulife One. From there, it covers your bills, your living expenses, and even your retirement savings. So now it's all in one place, working efficiently and more transparently for you. So how does Manulife One stack up against a traditional mortgage? I think that's important to lay out. And the slide's going to show the three key differences. They're really important to understand. So first up, interest on a traditional mortgage. That's heavily front loaded. So that means in the first 7 to 10 years of a traditional mortgage, most of your payments are going towards interest, not to principal. So think of it like you open up that annual mortgage statement. Let's just say for easy numbers, you paid $10,000 towards your mortgage last year, but you look a little closer and you see only 3,000 went to pay down your actual principal debt. The rest went to interest. It's actually very demotivating when you start to look at that breakdown. With Manulife One, as I mentioned, we use simple interest calculated daily. So that means every day that your balance is lower, you're going to pay less interest. And it's much more efficient to manage your debt that way. Now, second, prepayment flexibility. With a traditional mortgage, that is usually limited to like a double up option each month, or you might get sort of a prepayment privilege each year. And that's because banks don't want you to pay off your mortgage. They want to keep you in debt as long as possible. Not only that, most Canadians don't take advantage of their prepayment privileges. Why? It's not because they don't want to, it's because they can't, because of cash flow. You know, they need to keep some extra money in a checking savings account if the transmission goes on the car, the furnace goes, you want to keep some money liquid. So most people don't take advantage of those prepayment privileges just to have that extra money in that rainy day account. With Manulife One, there's no restrictions to principal pay down. So that's why clients are putting their entire paycheck goes and is directed into the Manulife One. But if you need that money back that day, next week, next month, it's there for you. You are in full control. You're sitting in the driver's seat now. And finally, let's talk about how payments are applied. So with that traditional mortgage, every single payment is actually split. Some goes to interest and some to principal. With Manulife One, every dollar you put in actually goes against principal first. And while interest is calculated daily, it's not charged until the last day of the month. So these three key differences, so we're talking daily interest, unlimited principal paydowns, and principal first payments are truly what make Manulife One such a powerful tool for being able to pay down that debt, accelerate that debt repayment. So let's talk about how people can actually pay off their mortgage faster because honestly, at the end of the day, that's what most people want, right? There are really only two ways to do that. First is by increasing the frequency of your payments. Now, most people with those traditional mortgages, they pay that bi-weekly or whatever lines up with their payroll, right? Second is those lump sum or those prepayment privileges, which I just touched on the last slide. Most Canadians don't take advantage of it. But here's where Manulife One changes the game. Instead of those bi-weekly payments to your debt, now you're essentially making payments daily because your entire paycheck goes into the Manulife One account. It immediately reduces that debt. And when it comes to lump sums, well, what's bigger than your entire paycheck? With Manulife One, every dollar you're earning is working for you the moment it hits that account. And like I mentioned, if you need it back, it's there. You're not locking it away. Now, I just want to ask a quick question. You don't necessarily have to answer it out loud, but just think about this. And apologies if you weren't expecting to have to do any math, but let's just say you borrowed $100,000. What is going to cost you less? Paying 4% over 25 years or 4.5% over 20 years? So 4% over 25 years or 4.5% over 20 years. Oh, we have some
There's an
smart
answer right there.
people
Over the
in the
20
audience.
years.
Yes.
A lot of
Okay.
keeners here.
So it's actually a really great example about how it's so important not to focus on the interest rate. It's about how long you are paying that rate. And with Manulife One, you're really in control of that timeline. So as we see, the 4.5% loan, which is that obviously the higher rate here, ends up costing you less overall because that term is shorter. That means more of your money, more of your payments are going to principal. So in this example, you'd save about $6,500 in interest and be debt-free 5 years sooner. But I always ask, why are so many Canadians laser focused on getting the lowest rate? Well, it's kind of what we've been taught, right? As an average Canadian, it makes it easy to shop for a mortgage when you're only looking at rates. But that focus does distract from the bigger picture. How long are you going to be in debt? How much interest are you going to pay over the life of this mortgage? Wouldn't you rather be the one deciding when you're going to be mortgage free instead of letting a bank dictate that for you? And that's really the beauty of Manulife One. It's now giving Canadians the flexibility to shorten the amortization, save on interest without changing income, without changing lifestyle, just by putting the money to work more efficiently for the client. So feedback motivates. Manulife One statements are designed to give that clear month over month progress. So you can see actually every day how those decisions translate into that principal reduction. So I'm just going to throw up a slide here to walk through what that statement looks like together. So like I said, this comes every month, which is great. Personally, I opt for paper statements in our household. My husband and I, we take a look at this. It's something that's not in an e-statement. There's no charge for a paper statement. Just gives us an opportunity to check in together. Are we on track? Or do we need to course correct? So this is the front page of the statement. When you open it up, the first thing you're going to see is how much you owed at the beginning of the month Here we're talking about $155,000. So this is now the sum of all your debts laid out very nice and clearly. Next, you'll notice your monthly income just over 5,000. Remember, this is now your fully functioning checking account. The moment that income went into the account, it immediately reduced that debt. And it gives you that sense of progress right away. Of course, life means expenses too. So this statement shows, you earned 5,000, you spent about $3,400. Now you're only paying interest on 153,000 and some change. So that's kind of a good feeling, right? Plus, with this approach, now you're free from separate mortgage payments, separate line of credit payments, maybe separate car loan payments. Now this is all in one place, and this is just your usual household expenses or property taxes, whatever you're paying out of your household. And this program is really about balancing income and expenses. The wider you keep that gap, the faster you're going to pay off your debt. You'll be amazed at how quickly that can happen. On the Manulife one, it is important to note that there is a small monthly fee on the account, which also appears on the second page of that statement. It's actually included in the money that comes out of your account automatically. So that is $16.95 a month. It drops down to $9.95 once you reach the age of 60. So that's included in that number, as I mentioned. And I'll talk about a little bit later what that fee actually covers and the value add there. Now, when I open my statement, to be honest, I truly just look at one number first. That's where my eyes go. It's kind of bolded here. On the white statement, it definitely pops out a little bit more. That shows how much in pure principal I chipped away that month. And again, that's where that motivation factor comes in month over month. Now, there's a graph at the bottom of the first page. And this is going to give you a year-long view of your financial journey. So when you deposit money in, the graph is going to dip down. When you withdraw money or make purchases, it's going to rise. Certainly peaks and values. That's truly a visual story of somebody's financial flow. My own graph looks very similar to this. And I've seen it for other clients too. Thanks to the flexibility of Manulife One, they've been able to manage through some of, various financial disruptions. Maybe they were planned or maybe they were unplanned. I think, things like maternity leaves or job losses or even just dealing with inflation. I know we had a little bit of relief on that inflation rate, but, things are just feeling a little bit more expensive these days. But it's important to see that year-long picture because 1 month isn't really a good depiction of how you're doing. If you look and you see the trajectory here, you can see over the course of the year, your debt is actually coming down quite aggressively, and it's reassuring to see it in that way. So I do want to bring this to life with a simple example to show how this works. Imagine your current setup. Let's say you have a mortgage balance of about 200,000 with your current lender. Let's say your household income is roughly 6,000 after taxes, and that income is probably going into a checking account and probably earning you nothing. And your monthly expenses like mortgage payments, groceries, utilities, all those things, let's say they're around 4,000, leaves you about 2,000 in savings each month. If it makes it to a savings account, it's probably earning you about 0.5% of interest. Now, I just want to run through that same scenario, but with Manulife One and what that looks like. So now instead of depositing that $6,000 of income into a regular checking account, now we're going to deposit it into the Manulife One. which is linked to your debt. It immediately reduces that mortgage balance to 194,000. And because interest is calculated daily on the Manulife one, now you're paying a lower interest on it. So here's a great tip too. This is something that I do, but not required. You have expenses. Let's say you put all of your expenses on a credit card. That's sort of a super user trick that we have. That means that full $6,000 is staying on the Manulife one as long as possible. Certainly not required, but you can pay your expenses with a credit card, or it can come out of the Manulife one. Now, let's take a look at month two because I like to show a couple months. You deposit that 6,000, your balance drops to 192, you spend 4,000, bringing it back up to 196. So that's actually 4,000 in pure principal paid down in just over 2 months. Now, over a year, that's over $24,000 in pure principal reduction without changing your income or your spending habits. But rather than having to do all those calculations, what's a great tool that we have is our online calculator. It really helps people to visualize how much you can save and how quickly you can be debt free because it goes from being a concept now to your own figures. So we're just going to walk through what that looks like together. It's super user friendly. It's going to walk you through step by step. I can make sure that Joe has a link to it so he can send out to the group after so you can test it out for yourself. So let's just run through a quick scenario. Let's say your home's worth $650,000, mortgage balance is $300,000, 4% interest rate, and you're currently paying $728 biweekly on that. Okay, so when we look at the savings now, one of the great things about Manulife One is any savings or money that's sitting in the account, whether it's savings or just waiting to be spent, it immediately reduces that debt and it reduces the amount of interest you're paying. So for this example, let's say you have about 2,000 in your savings account currently, or sorry, checking account, 5,000 in your savings, nothing else in short-term savings. Now let's look at other debts you may want to roll into your Manulife One account. With a Manulife One, you can borrow up to 80% of your home's value, which gives you flexibility to maybe consolidate some high interest debt. So let's just say you have a line of credit, $10,000 is owing on it. The rates fluctuate on unsecured loans from I've seen 7% up to 16%. Let's just say it's at 13%. You're putting about $500 a month towards it, sometimes more, sometimes less. Just trying to figure out at the end of the month if you have extra money, where to allocate it to try and get ahead. Now let's talk about cash flow. This is where we're going to enter in income and expenses. This is going to be outside of that mortgage and that line of credit because we've already accounted for those in the calculator. So for this example, let's assume your monthly take-home income is about $7,000 and expenses around $3,500. So here's the exciting part. Based on all the information that we entered, your Manulife One number is $102,714. That means you can save over $102,000 in interest and be debt-free in just under 10 years. Remember that current mortgage rate was 4%. The Manulife One base rate is 4.95%. So even with almost a full percent higher rate, you're still coming out ahead because of how interest is calculated and the term. Okay, so your money's working harder every day. Now, I'm a numbers person, so let's just look at the side-by-side breakdown of what that actually looks like. And it's quite clear with Manulife One, you're paying down more principal from day one. With a traditional mortgage, you actually don't start paying more in principal than interest until about, looks like year 8. So that's actually just 2 years from when you would be debt free with a Manulife One. And again, we're talking about almost a full percent higher interest rate. It just goes to show you how it's not about rate. It's about how long you're paying that rate. And with so many Canadians coming up for mortgage renewal this year, this is a huge mortgage renewal wave in Canada. It's the perfect time for them to explore their options. Just a little bit of time invested in researching could save them thousands of dollars. So, when's the best time to start this process? Honestly, before you need it, life is going to happen, jobs are going to change, you're going to have unexpected expenses because that's just life. Opportunities are going to present themselves. Having a Manulife One in place gives clients that flexibility and peace of mind, and truly, it's just giving them options. One of the best parts about Manulife One is that once it's paid off, you can keep using the Manulife One account. It actually can be your account for life. It can be your financial safety net, whether you need a new car, that kitchen or bathroom renovation that you've always planned for, helping the kids with school, or I have kids that are a little bit older in their 20s now. So, think about home purchases and trying to get them into the housing market, and out of my basement. Clients have worked really hard to build the equity in the home. Manulife One helps them access that equity when they need it or if they need it without having to jump through hoops. So essentially, they get to be their own bankers. Now, Manulife Bank is fully digital. We have no branches, but we have full access. So you can do everything from mobile check deposits to e-transfers to bill payments to, point of sale purchases with your access card at the grocery store. And if you think about it, because we don't have all of those brick and mortar branches, think of the savings that we have as a bank. And so we are able to pass those savings on to clients through better rates and innovative products like the Manulife One. So I said we don't have those brick and mortar branches. So some people may be wondering, well, I still need access to cash for, a few things still in life. We're part of what's called the exchange network. So this is most commonly found in credit unions. So I think Libro, Meridian, Windsor Family Credit, National Bank is part of the exchange network. Essentially, then as a Manulife Bank client, you get access to all of these ATMs across Canada with no fees. Personally, I find when I need cash, even though I have these ATMs available to me, I end up just getting cash back at the grocery store. That seems to be the easiest way. I'm always getting milk or bread or something, one random item. So that's an option too. But I did want to put up this slide just to show you guys how robust that network actually is, because with the exchange network, I found that I had 10 times the amount of options for ATMs than I did when I was with one of the big banks and banking with them previously. However, if you are like my Uncle Sean, he's a little bit old school. He likes to walk into a bank and have a, a long conversation with the teller, and they're so sweet to him. Don't worry, we have those clients covered too, because Manulife Bank actually has an agreement with Royal Bank. So Manulife Bank clients can go and do deposits at any RBC teller. You just need to make sure you have the deposit slips ahead of time, which we can order, no charge. It's just something you need on hand so that RBC knows where to allocate those funds. Okay, so I feel like I threw a lot of information. I hope you're walking away with some fresh ideas, maybe some new perspectives on how you can get your money working harder for you. If you are interested in learning more, let me know. I will also mention that we actually do have a promotion going on right now where we are waiving that monthly fee on the Manulife one. So that's $16.95 a month. That's being waived for 3 years for any applications that start before June 30th and fund by the end of October. What the process looks like, well, if you are looking at refinancing or moving away from your existing lender, whether you're at maturity or not, we actually have a mortgage specialist that would go through the application process with you. We would do the appraisal, we do all the legal work as well, and there's no cost to you because of the relationship that you and Joe have with Manulife. Because of that contracting, there's no cost for the legal, the appraisal, no application fee. We cover all of that on a lender switch or a refinance. So something, a great benefit that would be extended to your clients as well.
Yeah,
And
lots of,
yeah,
yeah,
any
lots
questions?
to unpack. Yeah, we'll see if there's any questions here. It is a concept that you have to kind of wrap your head around. I know years ago when I was introduced to Manulife Bank, I'm thinking, oh, okay, it's almost too good to be true. What do you mean, like I can be debt free in 9 years as opposed to 25 years? And I'm really not doing anything different than using my own cash flow. Now, this is very, very important. Everybody needs to understand this. Manulife One's not for everybody. And typically, like Manulife One works when there is more money going in than coming out of the bank account.
Mhm.
If you are someone that tends to overspend, and I know we're at times we're all like that, but you could run into a situation where you'll forever be in debt, and you're using the greatest asset, the largest asset that you have, which is your house. So that's very, very careful. And I know with my clients, I kind of walk them through sort of cash flow. If you honestly really want to work on your cash flow, Manulife One helps you with that, because in the traditional way, we kind of set our mortgage aside, and we don't look at it until the renewal comes up. Like maybe once a year you get the statement, and you're in shock saying, oh my God, I made $12,000 worth of payments. I only, reduced the principal by $1,000. But this Manulife One actually puts the debt right in front of your face. You log in, you're in negative, you're in a negative position, when you log in and you look at your bank account. So then that, in my mind, subconsciously helps you in your spending habits, to be quite honest with you. And so then you kind of look at things in terms of, do I really need this? Do I really not need this? It gets into maybe another session we can do is talking about wants and needs of financial cash flow, because that's how I got introduced to the Manulife One, was from an individual who wrote a book all about that. But it is a different way of thinking in terms of the banking. Christy, to your point of like people using bank accounts, I have clients that have like 5 different bank accounts, and every month they put $5 there and $10 here and this and that, and they this is my travel, this is my this is my Christmas thing, and sometimes that's the way you're wired and it makes sense for you. But if you think of the fact that that money is sitting there, and it's $1,000 or $2,000 or $500, it really is dead money and it's not doing anything for you. Whereas then I've got this debt that I am accumulating interest on it, and I can at least have that debt reduced, even if it's for half a month or a week
Mhm.
or a few days. It makes a difference in the long run.
I think
Um,
you're right because that when I describe it to people at its very core, its very essence, Manulife One is a prepayment strategy,
yeah.
right? And that's what you're doing. You're using your money against your debt. It's not sitting idle in a checking or a savings account. You're putting it to work every day.
Yeah. Yeah. And the concept of being so focused on interest rates is very, very interesting. I have this conversation with a lot of clients, and they say, "Oh yeah, yeah, well, I got 1.9% and stuff, but at the end of the day, they amortized it out for a longer period, and they're no further ahead than the person that was paying 4% on their Manulife One because
Mhm.
of the cash flow." So using that tool, and we'll get that calculator sent out to you, and it's very, very user friendly. You can do it with general numbers, or you can get really in depth, which is really cool. And it will show you based on sort of your current spending habits and your current situation whether or not you would benefit from a Manulife One. And I'm
Mhm.
always happy to sit down with anybody and work those numbers with them as well. So, so yeah, we get sort of focused on the interest rate now. That being said, what was it, 2023, when interest rates went crazy, after the COVID, interest rates went back up. The Manulife One is a variable rate line of credit, let's call it, or
Mhm.
account program. So, there were clients that were paying, 6 or 7%, on that. And yeah, you would have been better to lock in. But a lot of my clients did lock in portions of that debt. And we didn't get into a lot of detail about this because we can certainly spend, a
Mhm.
session just on that. You can have sub accounts within your Manulife One. So if you owe, for example, $200,000 as a total mortgage, or 200,000 is nothing nowadays. Let's use real numbers, right? 400,000. So
Yeah.
400,000 that you owe, and you're worried about sort of interest rates and stuff like that. And I get that. You can do a little bit of a hedge strategy where you can say, okay, I'm going to take 100,000 and I'm going to put it in a 1 year and lock in the term, and another 100,000 into a 2 year and lock in the term. So you can strategize and have locked in portions within your Manulife
Mhm.
program. So there's lots of flexibilities. You can have something like 18 of those types of sub accounts if you wanted to. And that gets into situations where you're lending to a family member or lending to a child, right?
Yeah.
And you want to kind of track that a little bit different. You can use that as a tool as well. So it's
I'll
very,
also
very interesting.
mention too, because it's important to note that how you set up the Manulife One, like let's say a year from now, or we do see an increase in those interest rates, you can lock in at a later date. So you're not sort of, it's not like, oh, I chose to keep it all in that variable line of credit, and now I'm unsure of what's going to happen with rates. We had clients certainly, in the 2020 and 2021 when we are in the lows of the lows, which who locked in at low interest rates at that time. So you can do that at any time when you're a Manulife One client. So you can decide, you know what, not comfortable with 400,000 being in that variable rate. Tomorrow or today I'm gonna lock up 100,000 in the 3 year or 200,000 in the 5 year. So you can really push and pull at any time. So that's the beauty of the flexibility of the product.
Yeah. There are a couple other points I want to bring up, for those of us that, oh, I just have to have like another bank account as well. Like I still continue to have like a bank account with Scotia, and I link it to my Manulife. So if you need to have, for whatever reason, I want to leave a little bit of money there at Scotia or TD or RBC, you can have that, and then you can easily move money back and forth. But the bulk of your money would be in the best way for Manulife One to work is the bulk of the money is flowing through the Manulife One, because then you get the full benefit of your cash flow. And for those that are heading into the retirement aspect, Christy, you touched on it very, very well, that really this is a tool that puts you into retirement and allows you to live freely. We talk about, or we hear the commercials about those reverse mortgages, right? So I don't consider this a reverse mortgage. I think that this works in a better sort of realm than a reverse mortgage, but it does allow for those emergencies in
Mhm.
retirement that you never planned for, and you do need to access some money. And I still want to stay in my house, and I don't want to have to go to the bank and ask for a line of credit because I'm not working anymore, that basically I can just borrow against my largest asset, which is the house, and be able to continue living there. So as a retirement tool, we often recommend it for clients, and it's a great idea in retirement. I know we rush to pay down our house as much as possible and be debt free, but in this day and age it's not good to be not to have something on title of your property, because of with all the hacking into personal information and stuff. It's easier to have like a Manulife one or a mortgage that's sitting on title, even though it's positive and you're not owing any money, because it kind of protects that asset as well. So in this day and age, that's what's often happening.
Yeah,
Um,
in the last 5 years, we've definitely seen an increase in Ontario in title fraud. And 90% of the targets of those fraudsters were people who were free and clear, like had no registration on title. So, like you mentioned, Joe, it is a barrier, a layer of protection for clients. It's one path where a fraudster can't necessarily access the equity in the home because that bank is registered, whether or not they borrowed it on it or not. It's just a layer of protection that they can't now tap into that because they would have to work through the bank to be, and all of a sudden, you want to try and eliminate as many people from that process when you're a fraudster accessing that equity. So, we have a lot of advisors that will put Manulife One on their client's home, either pre-retirement or while they're in retirement for a couple of reasons, like you mentioned. A, just that safety net. So, if the furnace goes, you need to do the roof. Now we have a tax-free lever to pull on. You can write a check out of your checkbook that you're given, right? It's instant. And not only that, we're now offering or giving you that barrier of protection on title. So you may never touch the Manulife one, you may never borrow on it, but there are benefits there in having it in retirement. So thank you for mentioning that, Joe.
yeah.
Christy, I do have a question about that. So technically, there would continue to be a mortgage registered against the house.
Correct.
So one of the challenges we have, and one of the things that people look forward to on their property casualty insurance, is a mortgage-free discount
Yeah.
when their mortgage is paid off.
Mhm.
So that would negate that potential if there continues to be a registered mortgage against the house. So Manulife ends up in first place. Just, I'm not saying it's a good or a bad thing. I'm just saying it's a real thing when it comes to property insurance rating.
Yeah, no, you're right, Scott. I've certainly heard that from clients because you guys are actually the experts. I am kind of curious on what type of, like monetary discount would somebody be looking at? I don't usually get in front of the experts on that. So I'd be curious because it helps me to do sort of weigh out the benefits, right? If we're talking about $1,000 a year. Um, and just having that peace of mind. I am just curious.
Would it be like a 10% discount, like would that, or that much, or no?
I don't even know if it'd be that much, but there's much smarter people on this call than I. So feel free to chime in.
Usually 5 or
Ian,
10% in that
Roz,
ballpark.
Kayla, anyway,
Okay.
anybody.
5 or 10, Ian
5 or
said.
10.
Yeah.
Yeah, 5 or 10 is usually the ballpark. And if somebody's paying 2 grand a year to begin with, you're talking $200 perhaps.
200 bucks. Yeah.
If they're paying less, then less, of course. But yeah, usually 5 or 10. It's different from insurer to insurer.
Yeah. And the insurer, just as we dig deeper here, the insurer actually needs to confirm that there's nothing on title But what if you prove to them that, okay, yeah, Manulife One is sitting on title, but they're in positive territory? That's that not
Doesn't matter if
help?
they're registered, they're registered. So we have a duty of care to the mortgage holder as part of the contractual obligation of the policy, right? That's the
Yeah.
issue.
And you
So
guys verify that there's nothing on title? Is that what you do?
we need a letter from the mortgage holder saying they are clear and
Discharged.
they are
Yeah.
released. It's
A
been
lot of
discharged.
insurers don't any longer. A lot of insurers just take it up most of good faith when the client tells us they're mortgage free.
Oh,
But
The
but
difference is if it, in a total loss or any loss is whose name the check is in.
yeah.
Right.
That's always the thing.
Yeah, yeah, yeah. Makes sense.
So there are the benefits that we talked about, just of having access to that tax-free equity. The other piece too, which I didn't touch on, is that if somebody is utilizing this as their day-to-day checking account, they're retired, they're in a positive balance now. And I know a lot of retirees like to sit with a large balance in their checking account just to make them feel better. I've seen, balances of $20,000 easily between a checking and a savings account. With Manulife One, we actually pay an interest on a positive balance. So they're earning 1% on the positive balance that they have in the account. $20,000, that's $200 in interest that they would be earning in the account, which may then offset any discount that they are getting on the home insurance. So just, something to think about there too.
Yeah. I
But a
want
good
to kind
point,
of,
Scott.
is there any other questions at all? See any? Just a couple of last points. I just want to attest to the customer service at the Manulife Bank. I know we've all dealt with Manulife on sort of the insurance side, and we all have horror stories to tell, and we're still telling them now, I think. But on the banking, I don't know what it is. The customer service level is bar none the best I've ever had. Like it's just fantastic. You get online with them and you need, for example, if you need to move money around or create a draft check, like a bank draft or whatever, certified check, and you need help with it. Most of the stuff you can do online, but certain things, you do have to call in. The client service is just fantastic. So that really helps you through the process. It is a bit of a process in getting into the Manulife One. There would be a transition between your old bank and the new bank. Give
Mhm.
yourself, 3, 4 months to make sure that, you're transferring stuff over. The auto withdrawals, the auto deposits have to be aligned and stuff. So it does take a little bit of a time. They're there to help you as well. But it's not a terrible process. And then we touched briefly on the application process. And so my contact is Rick Johnson. And Rick, like fantastic Rick. Rick is the long lost ZZ Top brother. So if anybody knows ZZ Top, so you can imagine him with the beard and stuff. So I think he's shaved it now, but uh, fantastic guy to deal with. So he is my rep when it comes to doing applications, and he's fantastic to sit with you. And I'm happy to be part of that conversation if you need someone to be on your side as well. But like Rick is fantastic to walk you through your own personal situation. And that's where it comes down to your own personal situation. Happy to do a pre-approval application to see whether you would what you would get approved for. They come in, the Manulife, and they will do the appraisal and the no cost to you. So they provide an appraisal. Then, if you move forward with everything, they do all the legal costs. You would be subject to a discharge fee at your current financial institution. So keep in mind there is a discharge fee there, and depending upon where you are in the cycle of your term, there would be like a penalty. So we try to align it so that you don't, again, if you know that my mortgage is coming due in October, we try to align that so that we kind of minimize those types of fees moving forward. And again, it is a very, very useful tool.
And I do want to say Rick is fantastic. For us, it's, what is the best interest of the client? There are times where Rick will have a conversation with a client. They're in the middle of a term. The penalty that we're quoted from that other lender is astronomical. And Rick will say to you, look, it doesn't make sense right now. I'm going to diarize this to chat, a year from now or when you're closer to your maturity date, and we can minimize that penalty. So it's really about doing that cost benefit analysis as well, because sometimes, based on whatever that penalty may be, you may save that much in interest in X number of months, right? So every situation is going to be unique. I do also want to mention that when it comes to legal and appraisals, yes, it's all covered off. We do not do that in the mortgage broker space. So I want to be fully transparent with everybody here. So if you have a mortgage broker you're working with and you ask about the Manulife one, we do not cover those legal and appraisal costs on the broker channel. That is something specific to the financial advisor channel. So I just want to be fully transparent with you guys there.
I didn't realize that, to be honest with you, because I have had some clients who come to me and basically says, "Oh yeah, I'm using a mortgage broker, and the mortgage broker is going to use Manulife One." And I say, "Oh, that's fantastic," and I didn't realize that then, they it's only through me, through the financial advisor sort of channel that they're getting all those costs for
Yeah,
free and
yeah.
stuff. So that's fantastic. So. Um, so homework, I guess. I need to send everybody out the calculator. So we'll get the calculator sent out to you guys. If anybody is interested to pursue this a little bit further, I'm happy to be part of that conversation and then connect you with Rick on this to, if nothing else, to explore to see whether or not this might be a feasible option. Again, it's not for everybody. It's a pretty interesting tool. I think I should sort of summarize. I know that other banks have these home equity lines of credits and stuff like that. That none of them work like this. So Manulife is very, very unique in this product offering. I think a lot of them have tried to do this, but it's pretty unique in the way that it is structured as an all-in-one banking solution for this, the needs of today and tomorrow. With that, any last questions, comments?
The only comment that I would make is, this is another opportunity that we're bringing to you guys through Jocelyn Financial. It's not an indication that we say this is something you need to do. I think it's something that you have to sort out for yourself and whatever the best course of action is for you and your personal circumstance. Joe is super happy to work with you to discover, and there may be other things that you want to talk about. But again, we're not pushing you to Manu Bank. We're not pushing you anywhere. We're just bringing you some information that could be helpful to you. So take advantage of it if you choose. And anyway, if there's other questions, reach out to Joe anytime. Happy to work through your circumstance with you.
Yeah. Knowledge is power, really. That's
100%.
what.
Yeah, we don't do a great job at advertising in the mass markets. We work very well with financial advisors because they understand our product. And that's why I have a job. I guess I'm the marketing and advertising team. So I get out there and spread the word. So it is something that not a lot of people realize is an option, but I can't tell you, and Joe, I'm sure you can say this as well, as when I talk to clients, they just say, I wish I would have known about this sooner.
Yeah.
Right?
Yeah. But I think Joe makes an important point. It's not for everyone.
Correct.
I know I've known about, how long have you guys been doing this, Christy?
So since 1993, we've been in the business. Yeah.
I was going to say I've known about it for at least 20 years, maybe more, and looked at one point, and like it's a unique offering in the
Mhm.
marketplace. I think both Joe and Christy have said that, and it may be super beneficial for you. So we recommend take a look at it. We're just not saying do it, right? So that's the difference between the two. And the other thing is Manulife itself, we do lots of business with Manulife, both on the life insurance side, the benefit side, and also on the investment side. So our group RSP is with Manu. So again,
Right.
we're not disparaging Manu in any way. I mean, we're challenged with some customer service. I think the biggest point to make there is that uh, Christy and her team is excellent at what they do. So you should experience no customer service issues. It's like dealing here. Great customer
Like,
service from all of
that's
you.
right.
Yeah, we do pride ourselves in putting the customer service, the customer first. I think we're a small enough bank that we can do that. We can pivot quickly. We can respond to clients' needs faster. So that's something that, we do put a focus on here at Manulife Bank, is making sure that the customer journey is what we want it to be.
Oh, fantastic. And with that, Christy, thanks very much for all this wonderful information.
Thanks
Uh,
for having me. I appreciate it.
this is great. Thank you.
Joe, is there a recording of this? Sorry, that
We have recorded,
yeah,
so we can have that sent out to everybody as well. And again, if anybody's interested, feel free to reach out. And I wish everybody a great rest of their afternoon.
perfect.
Thanks so
Thank
much.
you.
Take
Okay.
care.